Good evening, friends. Welcome back to my channel Infinite Trade. My name is Robin, and this video is the most awaited video for a lot of people. So yesterday I had already posted this video in Hindi language, and today I'm recording this in English. So this video is completely based on Fibonacci levels. Okay, so I would like to tell you that when you watch this video, keep a book ready and note down the important points, especially how do we mark the Fibonacci levels on a little bit higher time frame. And the important thing in this is the strategy that I use it for intraday purpose. So let's dive into the video. So also one more thing, you don't really have to go and pay to any YouTuber for any sort of course, because this complete series with about 20 to 21 videos should be more than enough to trade intraday in a better way. So like what I usually do is I only rely on Fibonacci levels, and I also use Elliott wave theory to some extent. That is basically to analyze the higher time frame, like weekly analysis or a monthly analysis. So whenever I get time, like when you people are used to this Fibonacci levels, I may plan the Elliott wave theory course also. And apart from Fibonacci levels, we also depend on the participant data, which gives us a clear picture, like what sort of trade are we supposed to plan on that particular day. So let's dive into the concept. So Fibonacci, so it is named after the Italian mathematician Leonardo of Pisa, later known as Fibonacci, in the year 1202, from the book Liber Abaci. Okay, so this is just a basic information. Like when you are trading this, I think you are supposed to know this. So this Fibonacci was actually invented by an Indian mathematician, Acharya Pingla, in the year 200 BC. However, we all know that a lot of Indian inventions was later not really given importance, but the foreigners, they used Indian inventions, and they launched it with their names. So anyways, so Fibonacci is a series of positive integers derived by adding two numbers. So what exactly it is? So look at this. 0 plus 1 will give you 1. Okay. 1 plus 2 will give you 3. 3 plus 5 gives you 8. So it goes on like that. So that's what the Fibonacci series is. And then in this, you get golden ratio, second ratio, third ratio, and also fourth and fifth. So we'll discuss that. So how do you get the golden ratio is basically, so the golden ratio is 0.618, or you can also call it as 61.8%. So we'll come to it what exactly it is. So how do you get this is, for an example, you divide 34 by 55, you'll get 0.618. You divide 55 by 89, you'll get 0.618. So that's what the golden ratio is. The second ratio is 0.382. So you divide 34 with 89, you get 0.382. So you leave the middle number. And the third ratio is 0.236. So you divide 34, leaving these two numbers, by 144, and you will get 0.236. So 0.382 can also be told as 38.2%, and 0.236 as 23.6%. So 0.618 or 61.8% is why it is called as a golden ratio, is because market will definitely show a strong reversal from that place. So for example, let's just mark some Fibonacci levels. So this is 0.236, 0.382, 0.5 and 0.618. Then you also have 0.786. So imagine market is moving in an uptrend. So for the uptrend to continue, what it usually does is either it will come and take support at 0.236 or to the max at 0.382, and it will then go and break this high and it will continue its upward trend. Okay. In most of the cases, sorry, I shouldn't have deleted it. Okay, let's make it once again. So most of the time what happens is market will not take support at 0.236 or 382. What market does is basically it will come and slow and steadily break each of this level, and the best part of reversal comes at 0.5 or 0.618. So that means a market retraces 61% and then finally approaches the high. The only problem here is breaking of this high becomes a little difficult, because you imagine if it takes support at 0.382, it is just this much of retracement. Then breaking this high becomes easier, but once it comes to 0.618, taking the high becomes a little difficult. It takes a little more time, but this is an ultimate level for people to invest if you're following a longer time frame. Okay. So Fibonacci retracement levels, like we discussed, 61.8, 38.2, 23.6, 50, and 78.6. So these levels acts as support in the market. And there is another tool which is known as Fibonacci Extension. That basically gives you resistance. So the resistance levels are 161.8, 261.8, and 423.6%. So Fibonacci extension is something we are not going to discuss much in detail here, because that is used mainly to get resistance levels when you do not have a resistance level. So what does that mean? Imagine there is a stock which has made an all-time high. Okay, this is an all-time high. So obviously you do not know what resistance do we have in the market. So in that case, we apply Fibonacci extension. You mark the low, you mark the high, and you mark the swing low. This gives you the upper levels of 161.8, 261.8, and finally for 23.6%. So these are the upper resistance that you get. But since we are preferably talking about intraday trading and a short-term trading, we're not really discussing the Fibonacci extensions, but we are going to use these levels. How is something which I'll tell you in a while. So let's move on to the second slide. So Fibonacci gives us support and resistance along with important retracement levels. That's what we discussed. Tools that are widely used by the institutions, like it could be proprietary traders, it could be in fact the FIIs. Say they usually depend on Fibonacci, pivot points, and VWAP, as these are completely based on simple mathematical calculation and focused on price only, except for VWAP. VWAP also includes volume. So Fibonacci and pivot points, if you actually look at in any particular chart, you will understand that market definitely respects that level very much. So that's why people started using CPR, which is central pivot range. That is nothing but a better version of pivot point, but more or less the levels remains the same. Okay, so since this is only based on mathematical calculations, it becomes easier for people to make an algorithm, because using of indicators like super trend, RSI, MACD, and there are a lot of things. So that is complex indicators and uses a lot of more information, which is a little difficult to use it as an algorithm because too much of cost and efforts are involved. So mathematical calculations always have a respect in algorithmic trading. Hence, the accuracy becomes better than those indicators. Fibonacci can be used to understand the trend, and it also gives us an opportunity to re-enter in an existing trend. Like we discussed earlier, that if the market is in an uptrend, we wait for a decent dip to 61.8%, and it gives you a beautiful re-entry to continue the existing trend. And Fibonacci, along with Elliott wave theory on a higher time frame, gives a broader view of the market. So this, like I told you, I usually prefer using it on a weekly or a monthly chart. I hope things are clear until here. So ratios of Fibonacci, which we already discussed, golden ratio, second, third, fourth, and fifth. So on a larger time frame analysis, I use all the ratios as support and resistance because you cannot skip any levels, since the levels will be quite far, so you need all of them. But when it comes to intraday, I exclude levels like 23.6 and 38.2. But since you will be using it as the new ones, I want you all to keep all the levels. Apart from this, 61.8 and 50% are the important reversal level in a trend. Either a trend reversal occurs or the trend continues. Okay, so let's move further. So there are three important ratios of Fibonacci extension, again, which we already discussed. That is 161.8, 261.8, and 423.6. I use one more for intraday, which is 361.8%. Okay. The above levels are used as targets. These extension levels we will use only for intraday. Fibonacci extension we will cover some other time when I think it is required. So now we'll see some examples on live chart, like how actually we can invest when the market comes to the important reversal levels. Okay, so whatever we are discussing right now, you can use it on any particular index or stocks or even international markets. So I definitely analyze Nasdaq, Dow Jones. So I use the same funda. The only thing that you need to make sure is, right now we are currently focusing on intraday trading. So we will stick to it. And like I told you, it works fine in every market and every stock and index. But we are going to focus completely on Bank Nifty. But the logic remains the same for everything. Okay. So since I trade Bank Nifty, I prefer doing it in Bank Nifty only, and it can be easier for me to explain to you as well. So this is the COVID time fall that we saw in the market. So how do I prefer using the Fibonacci levels is something I'm going to show you. So this is the daily chart. So here, if you see, what market did is market had a support somewhere at this place. Okay, due to the magnet effect, it is moving a lot. So market had a support somewhere here, and this support was broken finally at this place. So what I do is I consider this swing as an important swing because this was responsible to break the support. So what I do is I mark a Fibonacci level from here to the COVID low. So what do you get here is, see, why? So in case if we did not had these candles ahead, so when will I consider this as a low? Because if imagine we only had this much of information, so this is the recent low that we have. In case if the low shifts further, I'll shift this low again down, but so far nothing happened like that. So what we do is, this is a downtrend. So in a downtrend, what do you do? However, market made a double bottom here, okay, a W kind of a pattern, and it went higher. But as a trader, what you normally do is, since this was a downtrend, the first time when it hits 0.618% or 61.8%, we usually go short at this place. So let me show you the chart. See, the first time when it came to 0.618, we saw a good fall until almost 0.236. So this fall was almost from 25,000 to nearly 21,000. So 4,000 point fall. So which was a good swing trading opportunity that you could do. Then what market did is, finally it broke this level and it continued to trade higher. Okay. And after that, it never came to 0.618. So now what you need to understand is, whenever market comes back to this place, that is a very good point of investing. But now, since the market has already achieved an uptrend, now what you can do is, you can put a Fibonacci level from this low to the all-time high. Okay. So if you look at this, market has been taking support at 0.382 level. So like I told you, 0.38. So if it takes support at 0.382, it becomes easier for any market to break this resistance and continue its uptrend. So we'll see if that happens, or in case if they break this low, that means they are planning to come to this area. So when Bank Nifty comes to this area, obviously you should look to invest. So you can buy bank Bs, and or you can buy some good banking stocks like ICICI or HDFC Bank, something like that. So I hope this example is clear. Now I'll show you another example wherein how we use it for a shorter time frame, or like the way I do my analysis and I post the video. I'm just going to show you what exactly I do. So if you look at here, so on a 15 minutes time frame, the market was continuously going higher, and then we had a level somewhere here which was acting like a support, and this support was finally breached. Okay, so this particular swing, so like I gave an example, so this is the swing which was responsible to break this particular support. So I'm going to take this as my Fibonacci retracement tools high. Okay, and we'll take the lowest low that we can see in the chart. So I mark this high and I mark this low. So what do you see here? The previous trend on a 15 minutes time frame is definitely a downtrend, and now the market is taking a pullback, and this is 100% pullback. It is not a trend reversal until and unless we start trading above this area for at least a day or two. Okay, so the first thing that we can see here is 0.618 level is 39,556, and also if you can see, there is a small gap pending here. So there are two strong resistances here. So if Bank Nifty comes to this place, 39,550 or 600, we are definitely going to look for a short opportunity. Okay, so I'm giving you a live trading idea. So definitely Bank Nifty can reach this place very soon. So whenever it comes here, in case if it breaks, nothing to worry. We will wait for it to come back below this, and whenever we see a candle, 15 minutes candle closing below this, we'll go short here. Okay, and what should be the target? All these levels are your target. The 0.5, then 0.382, then 0.236. So each and every level becomes your target. I hope this is clear, so you can make a note of it, because this is going to help you, because this is something live and we are yet to test this level. So this is all about how I do my analysis with Fibonacci. Now the main part of this video is my strategy that I use it for intraday. So we'll discuss that. So we saw examples of this. Now we'll look at my strategy. So my strategy is very simple. For that, what you need to do is the Fibonacci settings that I use. I'm going to show it to you right away. So that is something you need to make sure that you follow. So I'm opening the settings. You can take a snapshot of it. Okay. So this is the settings that I use. Take a picture of it and you can use the same settings. So why I'm showing the settings, because we have included 4.236, 2.618 and 3.618 as our extension level also, which can give us the resistances or support levels, basically the targets for us. So now listen to my strategy carefully. So what you do is, okay, let's do one thing. So in yesterday's video, I covered these two candles. So we should move to 5 minutes candle. Okay. And your strategy is as soon as 9:15 to 9:20 candle, the first 5 minutes candle. So this is 30th of September. This is the first 5 minute candle. Okay. As soon as you see that the first 5 minutes candle is over, all that you do is you put a Fibonacci level from high to low, then from low to high. Okay. So now you have support and resistances. Now you listen carefully. These things you need to make a note of it. So this orange line is the 0.618 level. Okay. So when market is trading above this level, that means it is in a bullish zone. And if market is trading below 0.618, that means it is a bearish zone. Okay. So why do we need this zone? Obviously, when it is in bullish zone, we'll prefer taking bullish trades. When it is in bearish zone, we'll prefer taking bearish trades. So now let's see what happened on 30th of September. So the first candle was a red candle. We are not really concerned about it. What it did is it tried to come above 0.618. Okay. So here first time it took resistance, made a red candle. So this is a significance that we need to go short, but we'll only go short if another candle closes below this. And then what I do is I basically trade a retracement, like I wait for a pullback here and then I enter and then the market comes down. But in this case, what happened is it immediately put a green candle and came to the bullish territory. So now we are clear that the market is in bullish territory. So all that we need to look for is to see if it really goes high. Okay, it went almost to day high. The first thing that you do here is you wait for a retracement to either 0.5 or 0.618 level and you take an entry. So it was an expiry day, I guess, and not an expiry day, I think it was Friday. Yeah. So market was highly volatile. In one candle it touched 0.618 and gave a sharp retracement. Okay, so what I usually do is I put an order at this place and wait and see if it comes in hits. So you can try that, or maybe after you saw this strong pullback from 0.618, you can consider entering it into a next candle, or if this candle's high breaks. Okay, so the first target, so in case if you bought here, your first target is 1.618. 1.618 acts as a strong resistance. So if market is non-trending, then 100% it will return from 1.618. If it is trending, then it will continue higher. Okay, so in this case, what it did, it went to 1.618, just put a couple of reversal candles, and immediately it broke 1.618. So imagine that you booked your positions here. When you see that the market has closed above 1.618, you can consider re-entering again on call, and your next target is 2.618. Okay, so 2.618 was achieved here. Then what the market did, it continuously consolidated at 2.618 and finally gave a breakout. So once it breaks out 2.618, your next target is 3.618. So this is the level that we added, if you remember. And if you see, market went to 3.618. If 3.618 breaks, then our next target is 4.236, but it did not happen here. And in any case, please write this down. In any case, if market goes to 4.236, you need to book your full profits and never hold positions there, because 4.236 happens to be a strong reversal area. Okay, so keep this in mind. You can look for an opposite side trade at 4.236, but never hold that same side's position. So this is how I trade intraday. Okay, I'll show you another example, and then I'm going to record a couple of more videos on how I traded, or how you should trade, or how you should have traded on Monday and today. Okay, so that two videos I'm going to cover, and I'm going to cover post market analysis video, like the video that I'm talking about right now. I'm going to cover it until the month end, so that you get about 20 to 22 videos, and each day will be a new scenario, and you will understand how I trade based on these levels. So let's look at another example. So let's look at 29th September. Okay, so what is our condition? We wait for the first candle. Once that is done, we put a Fibonacci level from low to high of the first candle and high to low of the first candle. This was the expiry day, and I had shorted calls on this particular day. So what market did here, the first candle was green candle, and the second candle was again a green. One more important point, if you find that the market goes continuously to 1.618, then you do nothing, you just wait and watch, and you short at 1.618. Okay, keep this in mind. When do you do this? Only when the market goes up to 1.618 continuously, because if it goes continuously, then 1.618 acts as a strong resistance, and it is not easier to break this if it goes continuously. Only when we get a dip, and then if it breaks it, I consider it that the market is going to be trending. So if it is trading above 1.618, that means it is going to be a trending market. So in this case, what it did is immediately it had put a red candle, and in fact it closed below our reversal area, which is 0.618. So here you need to be ready to go short. Okay, any small retracement, you take that opportunity to short here. Your first target from this place is 1.618 on the downside. Okay, so for us the downside is here 1.618. The target was easily achieved. Here's where I booked my profits on the expiry day. Then see what market did. It only consolidated at 1.618. Why? Because if it breaks 1.618, then it becomes trending. So market was continuously taking halt, and then finally it went to 0.786 level, and it immediately formed a evening star kind of pattern. Here it broke 1.618. Here you can consider buying put, and your target is 2.618, which was achieved here. I hope these things are clear. Then see, it broke 2.618 again, like it took a retracement, and then it gave the target of 3.618, also the purple line, and almost close to 4.618. And from 4.618, see, it immediately showed some reversal and it did not go beyond this. So this is what I was talking about. So now let's so last point. So when you have too much of quantities, then when this level breaks 0.618, your first target should be the 0 level. Okay, market will most of the time take a halt here and then go up, then make a new lower high and then come down. So here you book some quantities and then your final target is 1.618. I book here all my positions only when this level is broken, is when I re-enter. So this is my strategy, guys. I hope you all liked it, and the upcoming videos that I'm going to cover, I'll challenge you. You will understand how to trade intraday, and you never ever you will require any other course to become a smart intraday trader. Okay, this is very much enough. So I hope you all understood this, and I'm going to record the other two videos also, like how we should have traded Monday and Tuesday, and then going forward I'll come up with everyday video so that it becomes easier for you all to understand. Thank you for watching. Let's meet in another video. Till then, take care. Bye bye.